Welcome to the Quant Room, the stories behind the data.
Welcome back to another episode of the Quant Room. This should be episode 4. The Quant Room is a series of, I guess you could say it's a podcast or interviews, show conversations just about systematic traders and the systems that they're trading, how they're developing them, the technology behind them, how they're backtesting them. And we're just getting the stories behind the data. And it's powered by Spikeet. I am the host, Agent, or you can call me Marcus. And today I have a guest that I'm actually very, very, very excited to talk to, have a conversation with, interview. I have some personal questions myself, and I think I can learn from. I have Coach Dave Mabe. How's it going today, Dave?
Great, Marcus. Good to be here. Thanks for having me.
Yeah. So I got a lot of questions to get through. So I don't want to spend too much time on the introduction, but I feel like some people might not know exactly who you are. But to give a quick introduction, Dave he's been an athlete. I think he still is an athlete, honestly. Sounds that way to me. You obviously trade. You've been very, I want to say, probably on the early side of technology for trading and developing tools for people like me. So, but I mean, obviously it came from, so you can do it for yourself, but for people like me, you obviously develop many tools. And then, so you're the CTO of Trade Ideas, and you actually started a company yourself called Stockticker that got brought out. So Dave has been pretty busy, during his life as a trader, and he's worn many hats. So, Dave, do you want to say anything else for an introduction for yourself before we get started?
Yeah, I'm the former CTO of Trade Ideas. I've been trading my own money for many years now, since probably 2005. And, my life changed pretty dramatically when I started backtesting. And that was a decent way into my trading journey before I did that. But yeah, it kind of changed the way I think about everything. And that's been my trading style for many years now.
Okay, nice. So to get started, Dave, you obviously worn many hats over the years. Athlete, trader, developer, CTO, and now you're even coaching. How do you envision yourself right now? Like what do you, if someone asks you what is your career, or who is Dave? Like how would you answer that?
Yeah, I think I develop systems. I think that's the best way to think about it. But
okay.
I'm a trader through and through. So, I work with some pretty serious traders. Those are the traders that I like to work with. People that are trading for a living. And there's a bit of a brotherhood among traders that are doing it for a living. That they're taking it seriously. They've taken the steps to, take full control of their own trading. They're not looking over somebody else's shoulder. They're doing it for themselves. And it's a hard thing to do. So there have been points in my career where I was a little hesitant to use the word trader. Like I didn't feel like I was quite good enough. But, looking back, that has been the constant throughout my whole career is trade. I mean, and looking back on it now, yeah, I was a trader then, I'm a trader now, and I feel like I'll always be a trader.
Oh, nice. I feel the same. Has that always been, I guess, the case for you, or has your role ever changed? Like maybe you first feel like, oh, I can't consider myself a trader because I'm a developer. How has that has that evolved over time, or was it always you wanted to be a trader and you felt like a trader?
I've always felt like a trader. It's, I've had periods of really good success, and then I've had some drawdowns where, the drawdowns are really the hard part, and the ability to trade through a drawdown is a really hard thing to be able to do. And really the hardest thing about trading is you basically have to reinvent yourself every so often. like completely reinvent what you're doing. And that ability to adapt, I learned pretty early on that is the important part and what's going to keep you in the game. Uh, uh, and if you don't have that, it's just going to be a matter of time before, you give up.
Yeah, I would agree. Trading can obviously invoke some emotional things in the person that can make them walk away. So reinventing yourself is important. And speaking of reinventing yourself, if you had to, I guess, take one of the core characteristics through all your journeys, what do you think that core characteristic that carried you through, or just really helped you through, all your different roles was?
Yeah, I would say automating stuff. Like I started working at AT&T many years ago, right out of college, and I sort of made a name for myself just automating different processes. It was, you think a tech company like AT&T would have everything automated, but there was so much stuff that was done manually. And I just could tell how my life could be better and a whole bunch of lives around me would be better if a lot of the stuff was automated. So I started doing that then, learned programming on the job. It's always to, make my life better with this one task I wanted to do. And that just kept building and building and building. So and around, I guess, 2001, when my youngest daughter was born, I started working from home, and all of a sudden I had some extra time. I didn't have a commute. I get up early in the morning, so I needed something to fill that time, and I started trading. And my time frame at the time was like swing trading, but the more I got into it, the shorter my time frame got. And it became like building another system for me, and then automating another thing, and eventually came to like really thinking about systems for creating trading systems. So I think that's the underlying thing that's the theme of my trading career and my whole career for my entire existence.
And just to speak to that, you said around 2001 is when you started kind of figuring out that, hey, I'm going to trade on the side here. Two questions here really quick. One, what was automation like? Like, was it even a field? Like, did it even exist in 2001? Were people even thinking about this in 2001?
Yeah, so way back then, I wasn't quite day trading then or automatically trading then, but I could start seeing things in my own trading that would benefit from automation. So I definitely started thinking about that. It was really around 2005 where I made the realization, okay, day trading is how you can make a lot more money than swing trading. Like it really dawned on me that it's less risky. All the news comes out after hours. You have, as a retail trader, you have more buying power intraday. You get paid interest at the time. There's a lot of decent amount of interest you get paid on your overnight balance. So I was like, okay, and the moves are more predictable. Everything about this made me realize day trading is just superior to swing trading, and that certainly resonated with me. And the more I've gone on and the more traders I've worked with over the years, the more I think that's true. A lot of the people that are really killing it are mostly day trading. It's not exclusively the case, but it's a huge part of the people that are doing really well. A huge part of the trading is day trading.
Okay, nice. And then give us I guess when I was doing my research, I found a lot that you talked about health, right? You talked about fitness. You talked about your days running as an athlete, how it got you into coaching and how you ran at UNC. I also was a track runner myself. I would love to hear the parallels between, kind of I guess, running on the track to running a system.
What event did you do on the track?
I was a sprinter. My brother was he ran cross country. He did like I guess the distance. So he did like the 800 and I think the 1600. I did the 1 and the 2 and I did all the relays.
Uh-huh.
Yeah.
Yeah, man. You know, I spent many years on track teams, coaching track teams. I love the sport and I love people involved with it. So yeah, that's super great. The big thing, I mean, there's a lot of parallels. The big thing is, I think one of the biggest parallels is, can you do something every day to prepare for something into the future? So can you put in the work every day, especially when, you know, it's not quite clear, you know, when it's going to pay off. It may be months, maybe years down the line before it pays off. And can you do that? Can you do something every day? And, you know, I was reminded of this just last year when, so I started doing push-ups every day. And I realized it's way easier to form a habit when you're doing it every day than if you're doing it any other frequency, weekly, every other day. So I was like, you know what? I'm just going to start doing push-ups. So I didn't have a huge goal for myself. I was like, all right, I'm going to do 25 push-ups a day. Nice. So I started doing 25 push-ups every day. So then there was this trail race that I did. And at the end of this trail race, they had a push-up contest. And a lot of the people at the race, there's a bunch of guys, and some of them were Fort Bragg. So these guys were Army guys, like much younger than me, much bigger than me. And I was like, well, I'll do this. It's going to be a little embarrassing, but I'll do the push-up contest. I won the contest. So I beat these guys that were way bigger than me. Like, you would never look at these guys and predict that I would have won. But it really dawned on me that if you're able to do something every day like that, you create such a foundation for of strength, and that you can build off of it. And the same thing is true with trading. Like, if you're to really do it well, you have to be watching the markets every day. And, you know, I suggest a routine. Like, you have to put yourself in a position to notice the unusual things about the market, because the unusual things are the things you can actually create a trading strategy from, you know. And if you're not putting yourself in a position to notice that on a daily basis, then you could be better. You should be doing it every day, because it's going to be easier to do it every day. And you know, you may be looking at the same charts every day, and it may be months, maybe years before you notice something that you can make a profitable strategy from. And to be able to put in the work, I think, is a nice parallel between, you know, sports and trading.
Yeah, I 100% agree, and I would love to jump in and talk about that, but people are gonna get mad, so I have to just move on. But I 100% agree. I think trading is one of the hardest performance sports. You know, it's probably harder than making it to the NBA, NFL, FIBA, whatever. You know,
another thing about the parallels is keeping track of what you're doing, keeping a journal about what you're doing each day, to go back and look at trends to figure out, okay, how did I do here, and how can I get better? And just a constant drive for looking at that and, you know, figuring out ways you can get better. I mean, the most important quality of traders that is the most correlated with success is whether you keep a journal or not. Like, I could tell you right away, if you're not keeping a journal, you're not profitable. Like that's just the way it is. And just because it takes a level of seriousness to be good at this. And if you're not willing to keep track of what you're doing, you're just never going to be able to make it. Like if you're not keeping track and keeping score, you're not going to be a winning trader.
Yeah, that's interesting. I literally started a YouTube channel and Twitch streaming my trades so I can document not only my journey but my review. I called it the 1,000-hour series. If anyone's interested in my channel's Who's Agent. So what do you think traders just overlook, like I guess like even in a journaling aspect, like just conditioning and repetition? Because that's something that athletes take very serious. But maybe I feel like some systematic traders, they create a system and they're like, oh yes, we're done.
I think that a lot of traders start back testing and they go through, they do a lot of work back testing. They create a good looking equity curve, and then they think their work is done, right? They think, well, I've made it here. It's just a matter of sizing up now. Well, I'm just going to watch the money come in. But really, that's the critical point, because the second you go from the theoretical of a back test to actually making live trades, even at the tiniest size, the learning continues, and you're going to learn a lot more from that point forward. So really, I always tell people to paper trade at first. Paper trading is really valuable. I know a lot of people are like, well, I don't really, I don't really feel the trades if I don't have money on the line. But paper trading is really valuable because especially coming from a back test, because you're going to see things in real time that you just don't notice in a back test, like the mechanics of how it works, how the candles are forming in real time, how the signals are generated. You're going to learn some things just by doing that without spending any money. So, and then, go to live trading with small size. Like the times over my career where I've paid a lot of tuition is because I sized up too quickly and didn't learn the lessons, or the lessons I learned just cost me too much money, right? So there was no reason to use a large position size when you're going live. You be using a tiny position size because you're going to learn those lessons, with as little cost as possible.
Yeah. That's something that most of us are still learning. So you originally joined Trade Ideas through the acquisition of Stockticker, and Stockticker was a company that you made for journaling for yourself, it seems like, and you obviously put it out so other traders can use it. Can you just talk about the idea behind Stockticker and what problem you were trying to solve with the journaling?
Yeah, well, I knew enough at that point, and I was just starting to day trade. I knew enough about trading at that point to know that, okay, I need to keep track of what I'm doing. And if I'm not able to do that, then this is not going to work. So I knew that was like fundamentally, I had to get that down pat. So I was like, I started doing it in Excel, and I realized, okay, if I'm going to start day trading, I'm going to be making more trades. So I'm going to have to do all this data entry in Excel. That seems crazy. And, here I was automating a bunch of stuff. So I was like, there wasn't an online trading journal at the time. So I created the very first one, I'm pretty sure. And it was really just for me. I knew exactly what I needed. And I was like, well, may as well make a business out of this. So that was super fun. I met a lot of awesome traders and great people doing that. And, I learned a lot about scaling systems, creating something that people want to use. There's a lot of, I learned a lot about development doing that. It was I knew that this was a tool that I needed for myself. So there was really no downside to doing it. So yeah, I had a great time doing it.
Many traders have kind of, maybe not many traders, but I feel like it's a good amount of us that have ran into problems that we didn't find a solution online and we had to make it ourselves. And that sounds like what you did. So what made you, I was interested in what made you sell Stockticker.
So I was using Trade Ideas at the time, and I had a bit of a partnership with Trade Ideas. I
Okay.
created a robot software that automated trades, and I knew that I needed Trade Ideas to trade well. It was something I was using all the time, and I knew I had a whole bunch of ideas about how I would improve it if I could. So we talked, and we naturally talked more, and it just made sense for both of us to, for me to come on board. And I was like a kid in a candy store, man. Like I said, this tool was something I knew I was using to trade well, and I couldn't really trade without. So, but at the same time, I knew that as my systematic trading was continuing to evolve, that I knew there's a lot of stuff that I could improve, especially with the back tester, but just also
Yeah.
had all sorts of ideas. It was, I had so much fun making that transition and working there.
It's probably some people who don't know exactly what Trade Ideas and what we're referring to is. Can you give them the rundown of what Trade Ideas and how it helped you, pretty much throughout your trading career?
Yeah. So Trade Ideas at its core is real-time alerts. So you can configure alerts to notify you in real time when certain events occur in the market. New highs for uh, you know stocks above a certain level, or like it's infinitely flexible in how you can generate the alerts, and then you're alerted in real time after you configure it. And that's knowing the exact situation and being able to dial in the stuff that you want to see and filter out the stuff that you don't want to see is just critically important. And that's
Yep.
really what you're doing when you're creating a system. I mean, there's tons of data you could look at. And I mean, a lot of traders get into a trap of, looking at too much data, putting too many indicators on their chart for no real good reason. So really your default should be ignore everything and decide what you're not going to ignore.
Right.
And that's what Trade Ideas really allows you to do.
No, that's a great explanation of it. So you worked at Trade Ideas for a while and you became a CTO. And while you were a CTO, and for people who don't know what CTO is, Chief Technology Officer, can you just briefly speak on, I guess, some of the progress you helped Trade Ideas with? Like you said, you was like in a kid in a candy store. You had all these ideas that you wanted to kind of implement and make Trade Ideas better. Can you just talk, briefly about what that was so they can get a background of like who you really are in the development field?
Yeah. Yeah, I guess I could talk about some of the things that I did there. The first thing I wanted to work on was the back tester. The back tester at the time, the results were like, it was so crazy. It was like the ugliest results you could possibly imagine. It had just results, per day, and that was it. So there were no trades, like you couldn't see the trades. There was no calendar to look at. There was no charts. So like you were basically flying blind. But I knew that it was a great backtester because it was so fast. And I knew that what it was doing, it was basically a tick by tick backtester across the entire market. And I knew enough about backtesting to know that is a really hard problem to solve.
Yeah,
And the fact that it runs so fast I was like, man, this is kind of a magic trick. This is really awesome. And, having that ability is pretty dramatic. And you can, to be able to test your ideas that quickly is great. So that's one of the things, one of the first things I did was create a front end for it, for the results that you could actually use.
Yep.
And so you just much more user friendly, easy access to the data that you really want to see when you look at a back test. Some nice statistics that you'd want to look at, some summary statistics. So yeah, that was the first thing I did there. I think the next thing was probably Brokerage Plus, which was a sort of the next generation of a robot that I had created. I've gone through several iterations of robots that I've created for myself to make trades. I mean, probably 7 or 8 versions over the years.
Nice.
And
I'm still trying to make my first.
and, I've gone through several iterations. So, my first version would, it would enter, you'd enter a trade and this would enter all the exit orders. So all that happened automatically. Then the next one I had like this bar trader thing where it would be watching, it would connect to IB, pull, have a real-time feed of the data from the bars. And then I had this system that I would use, what I was using at the time, that would trade off the bars. So I had some automation there to automatically do everything about that and give it to me in a visual way.
Oh, wow.
So the next version was like even more automated. So, and I could have more strategies in the program. So each step I was like, what I've done is pretty good, but it would be really nice if I could do this. So, I was just constantly iterating on what I was doing and, a real need I had for my own trading. And that's really, another thing I learned at Trade Ideas is, when you're developing a popular piece of software, you get a lot of requests for features. And if you don't have any real expertise about what you're working on and the domain itself, your tendency is to say yes to way too many of those requests. And what you end up with is frankly, I think what Trade Ideas ended up with, like too many features in the software. And what I learned from that is you really have to say no to a lot of these requests because, and it sounds like, wow, you're ignoring the users. Sometimes you do have to ignore the users, right? And you have to have sort of a litmus test, and you have to know enough about the domain to understand, okay, is this really going to help traders? Is this really going to help traders make money? That's the litmus test you should be using for any sort of features you need to add to a program. So what you end up doing is you end up saying no to a lot of stuff, or you should be. And that's going to allow you to really focus on the important stuff. But, it's hard to say no to people sometimes. So I think that was one of my biggest takeaways from my time there.
Okay. And you mentioned that you really couldn't see yourself leaving Trade Ideas, and I think you labeled it as, you've seen it almost as your identity, the thing that you just couldn't imagine yourself not doing anymore, right? So my question here is, and not to get too deep with it, but just I guess how do you leave your identity? Like when you find yourself as something,
and
then you say, I have to leave this, or this is not me anymore. How does that, what is that process going through that like?
It's pretty stressful, frankly. I mean, I'm pretty change averse. I feel like I'm pretty risk averse, even though I trade a bunch of strategies. I mean, it kind of seems silly to a lot of people to say that, but, change is hard for me. And I knew I needed to make a change because I realized, okay, I'm on a mission, and I've really thought this through. I'm on a mission to turn 10,000 hobbyist traders into full-time traders.
I like that mission.
What was happening at Trade Ideas, I knew I needed to step away to be able to accomplish that mission. And having that vision and that mission in mind, I knew that was sort of the ammunition that I needed to leave. But, change is always stressful. It doesn't matter what sort of situation you're in. it's the same thing for trading. I mean, if you like, I remember trading my first basic, basically my first set of ideas that I turned into a strategy. And I remember I had, it was working well. I mean, I put my daughters through school with the strategy basically.
Mm-hmm.
And then there was a drawdown. I don't know, it was probably 2012 or so. So I scaled back my size a bit and kept trading the strategies. And then they came back. So in my yearly review, I was like, okay, well, man, look, if I had not have scaled back my size, I would have made a lot more money. So then the next year, another drawdown happens.
Mm-hmm.
I'm like, man, I'm not scaling back this time. I learned my lesson.
Boy. Oh boy.
So you can guess what happened, right? Wow. At some point, the market is going to, it's going to humble you.
Yourself.
It's going to humble you.
Yeah.
So at that point, that drawdown was terrible to go through. I mean, you feel like you're at a dead end. Like you feel like you're out of ideas. I almost quit. And what I realized though is part of it was I was so in love with these strategies because, I tell people now that the only thing harder than coming up with your first profitable strategy is coming up with your second.
Yep.
Because once you come up with that first profitable strategy, you're like, okay, I figured it out here. I know how trading works. I hear all these other people saying stuff, but I know what trading works because I can see it day in and day out. So I work with a lot of traders in that exact same boat that you're in a rut. You don't really, you need to be thinking about other ideas to be able to evolve. And the fact that you're trading just one strategy, eventually you're going to have to trade something else. And you're going to have to be adding new strategies to the mix. And the quicker you create a process for yourself for doing that, the better off you're going to be, because you'll be quicker to get rid of a strategy that you need to get rid of. Where if it's your only strategy, you're like, man, what am I going to do now? Like this, what do I do? So you need to be constantly backtesting, constantly thinking about new ideas, having different ideas in different phases of development. You need to be constantly doing that, and your trading will be way more robust when you do that.
Yeah. So, that's interesting. So, when you find your identity as a man, as a person, as a career, it can be stressful to change. And you would say the exact same thing across like the markets. Like you find maybe you see yourself as a shorter. And even though someone's telling you about this great long strategy you're making money on, your attachment to this strategy, your identity will stop you from even looking that direction of researching along. Is that what you have found in some of these traders that you're speaking about?
Yeah, I think a lot of the traders I work with are they've had success with one strategy, but they're worried that maybe they're in a drawdown now, and they're worried about, man, maybe the game's over here for this strategy, and they don't really have a good way to create new ones.
Mm-hmm.
So, I mentioned the drawdown I had when I was thinking about quitting. What I realized then is I have to have a strategy or a process for coming up with strategies just way quicker than I was before. So I created a process for backtesting, and really the key part is optimizing a backtest very, very quickly.
Mm-hmm.
So I really thought about a process for myself to be able to do that. So I wanted to really reduce the time between the having an idea and backtesting it and getting it live. So, and that's really what I worked on. So I really created this tool set for myself to do that really quickly. And what I realized is most traders backtest completely wrong. They're doing it the wrong way. And what I mean by that is when most traders go to create a backtest, they're trying to find their final answer with that first back test, right? So what they end up doing is you run a back test, it doesn't quite look right. So they make a change, run another back test. And that's not quite right. So basically they're guessing and checking.
Yeah.
The right way to do it is that first back test you shouldn't really be that concerned with having that be the final answer. What you want to do is you're really collecting data at that point. Your filter should be pretty wide. You should have a large number of trades in that back test. And that's really your starting point.
Right.
So when you do it that way, you're going to end up with something that's way more robust. There's a lot less chance of you curve fitting the strategy. Mm-hmm. And you're going to end up with something with a lot more trades and it'll be a lot more profitable. But the problem traders have is they're shooting for that final answer right away. And when you do that, you're just stuck in this loop of backtest after backtest after backtest. You're just, if you find a strategy that way, it's almost by accident.
Okay. So before we really dive into the backtesting, can you just give me really quick, you mentioned, not here, but in my research and other interviews, and you also have your own podcast, you talk about various subjects, and during these various subjects, you have talked about edge a lot, and you have defined edge in multiple ways, and you also stated that your mission right now, or maybe it's been for a while, is to provide as much edge through yourself or through other traders as possible. So I'm wondering, to you, what exactly is edge in a practical sense?
I would say it's a trading edge is a trading system that is profitable, and it's one that you can believe in and that you have faith in. I think, and it has a positive expectancy. So that's basically how I would define a trading edge.
Okay. And then with that being said, my next question is, can an edge be temporary? And if temporary, how temporary? Can edge be like, hey, this system works 3 months out of the year, but maybe the rest of the year I'm not trading it or something? Like, how is edge can it be a temporary case? Like, this has worked seasonally and I'm going to trade it seasonally. Would you define that as an edge too?
I would define that as an edge maybe, but it's not one that I'm interested in trading. Like I'm looking for robust things that I can get behind. Mm-hmm. So think about it. I think trading is actually pretty easy if you're not trading with a lot of size, and like relative to you, like
right.
But as soon as you start trading, with a plan to trade with a lot of size, then you have to have a path to confidence for the strategy. Mm-hmm. And without that, like you're not going to be able to trade with meaningful size, meaningful to you.
Okay.
So if you don't have that path to confidence, then you're not going to be able to trade through a drawdown. So I would not trade a strategy where it works this time of year and doesn't work this time of year, unless I was just so confident in the fact that pattern would continue, mm-hmm. that I could turn it on during this time and turn it off during this time of year. But I can't imagine a system such that I could get confident in that.
Okay.
So I think a lot of when I optimize my strategies and my back tests, I think a lot about what is going to continue into the future. Why is it going to continue into the future? Mm-hmm. When I add a rule to a strategy, I've really thought that through in a deep way. And so when I optimize, it's actually really hard because I'm trying to come up with something that is robust, and I don't want to have to re-optimize it in the future. Like ideally, I would just have this thing running and it would continue on to the future without me having to re-optimize it. And there's some strategies I have that are like that,
Yeah.
But and as you do this, as you get more practice at this, you'll get better at doing that.
Mm-hmm.
But yeah, I don't want to have to make decisions about, you know, turning a strategy on or off. Like even the fact that you're doing that makes me think, okay, you know, if you feel yourself having to do that, I would step back and go back into your optimization process, because I think there's something you could do better with it so that you end up with something that's more robust.
Interesting. Okay. Sounds good. All right. So let's dive into probably what the people really want to get into, the back testing, you know, and how to go about it. Now, I'm very interested. You kind of already briefly talked about it. A lot. You say a lot of people back test wrong. Their first back test they're trying to use as a final back test.
Yeah.
When they should be using that as a wide sample to get pretty much data, to build a data set that they can optimize on. Briefly talk to me about exactly what is, I guess, what is the first step to back testing, right? Like with the first, what should I be looking for on my first pool of information back test that I do? What should I be getting out of it? What should I be trying to learn?
Yeah. So, all right. So I'll go back to this, one of the first strategies I traded and the first back test I did, basically. So the first strategies I traded were gap strategies. So look for gapping stocks, you know, above a certain threshold, and look for a pattern in the first half hour of the trading day. And if the pattern happened, traded it with a certain stop, you know, relative to that pattern. And I knew, so at the time I had kind of a mentor and some traders I was collaborating with on this strategy. It was kind of back then there was a vibrant trading blogosphere that was pretty awesome. And I remember, you know, I would trade a lot of the same things that these other guys were trading. So I remember asking one guy, you know, hey, did you take this trade today? And they're like, no, well, I don't take trades where, you know, relative volume is below, say, 3.5, whatever it was. And I was like, okay, well, how'd you come up with that number? Like, well, just kind of, you know, it's a bit of a feel thing, you know. I'm like, okay, well, that didn't make really a lot of sense. Like, let's look at the number and see, you know, why we should be using that number. So what you should do in your back test is have a threshold that's much lower than 3.5. Like maybe if you think the number is 3.5, like the optimal one, maybe put in 2 or something even less. You're going to end up with a lot of trades. But what you'll be able to do with your optimization process is figure out the exact value you should be using for relative volume in a way that maximizes the number of trades and the amount of profit in your strategy. Yeah. So you can basically figure out the number you should be using. And you do that by having, you know, a very large number of trades in your initial back test, knowing that by the time you get to the end of your optimization process and you're going live, maybe you're only trading 30% of the trades in that backtest, maybe even fewer, maybe 10%. So, but really the key is that first backtest has basically all the trades or anything in your universe that you would even consider trading.
Yeah.
And then you can use that to really end up with something that's way more robust than just guessing and checking, or, you know, picking, you know, 3.5 for relative volume out of a hat.
Yeah. Okay. So actually I want to do first of all, I want to build the systems that you're using for the context of the audience. So real quick, if we can get through this, I guess, how would you describe your trading style at a high level?
All day trading. I trade a whole variety of systems. So you know, I've got upwards of 30 systems that I trade.
Nice.
So it covers the whole gamut. And the way I think about it is I'm thinking about coverage over the market day. I'm thinking about, where do I have excess buying power that I can put to work during the market day? And then how can I create a system around that part of the market day to optimize it.
Oh,
So
that's very unique. I never heard that. Okay.
So, I've got some systems that trade the pre-market. I've got some systems that trade the open.
Okay.
I've got some systems that trade during the market day and then the close. So that's in general the way I'm thinking about it. Where do I, where just, given the structure of the market, how can I create systems that where I have as much coverage as I can across it?
That makes a lot of sense from a day-to-day basis. It's like you're attacking the cycles, like for a swing trader, it's like you develop a strategy that's attacking the cycles throughout like the I guess the rotation of the market, but you're doing that for the day. That's really intelligent, I think. I haven't heard anyone say that. Okay. So you mentioned you kind of trade everywhere, so I'm assuming this is small cap universe, of course, large cap, like what is is it ETFs, the SPY, like you have all that stuff going?
I've got systems for everything you just mentioned. Yeah.
Okay. And then roughly speaking, how does your system exposure break down between like long and short? Like is it 60-40? Is it a lot of more short, or do you...
It's more short, and yeah, most of my profits from my entire career are mostly on the short side, at least probably 70% on the short side.
Okay. And then are you a fully systematic trader, or do you do like a hybrid approach with that?
Fully systematic.
All automation?
Everything's automated. Yeah.
Okay. And then have you explored other markets like futures or crypto in like a serious way, or not really?
Yeah, I've traded futures. I was looking back in my journal from probably 2011, because I remember trading futures at that time, and I was going back to look and say, okay, let me look at what I was doing there. And I actually did pretty well, but I remember I kind of lost interest because it's just a lot easier to come up with edge when you're applying a strategy across the entire market. Like there's just so many more opportunities. And think about when you like the futures contracts, everybody's looking at one chart. Backtesting on one chart is not hard. Like you could have many tools that will be able to do that. What's really hard is backtesting a strategy across the entire market. There's very few pieces of software that can do that. So for that reason, I knew that A, it was easier to find edge if you're doing it that way. And B, because it was such a technically hard problem to run a backtest across the entire market, sort of my competition, other traders were going to find that really hard. So I knew that my competition pool was lower because of that. So that's the way I thought about it. I think there's, I could tell you this: if you have a system and you're trading it well for the futures, I think you're going to even do better using it on the U.S. equities market. You may have to do some adapting, but I think you definitely have the seeds for a really good system in U.S. equities.
Okay. And then lastly, I guess when you got started, you said you got started around, I think you said 2001, right?
Yeah. So my first swing trade was then, probably, if you can even call it that at that point. I was sort of fumbling around. But then 2005, I think August 2005 is when I
moved
started
to like systems.
Day trading. Yeah.
Okay. And then what was like, I guess, the starting when you got started, what was like the starting amount roughly?
My account size?
Yeah, like was it like the 25K?
It was right, like just above 25K.
Yeah, so like most of us. Okay, so you made the dream happen with the starting amount that most of us is trying to make it work with. And then would you say now you can live comfortably off of just your trading income? Like you're good? Yeah,
I've done well, and I've always and I didn't tell, I kept this a secret for a long time, but I always made more money trading than I did at these other jobs.
Wow.
So I knew that I kind of didn't want to tell people that for a long time, but
You're a trader.
I'm a trader. Yeah.
Yeah.
And you know, for the optimization tools that I've come up with for a while, I was like, man, I know these are good. I'm never telling anybody about these. But then as time goes on, I'm like, well, I want to actually change this industry. I see so much snake oil out there, and I see so many people doing it the wrong way.
Mm-hmm.
Like we're talking about backtesting. They're doing it wrong. Like there's a much better way that you could do to backtest and actually end up with something that's profitable. And that's really I've created tools and made them available for people who are serious about trading, who are ready to do the work to be successful.
Yeah. Okay. Yeah. So let's walk through a backtest here real quick. So right now I am currently doing a study on small caps. I'm not going to say exactly what, but I'm pretty much looking into shorting some gappers in the small cap world or something around that area. Right.
Okay.
So I create my data set. Now, typically I have a couple of different data sources, but let's say I'm using Spikeet to create my data set. So I get my data set. Let's start there. And I want to use a small cap world. Initially, and this, you can stop me whenever. Initially, I grab everything from, I'll say, 99 cents and up. U.S. equities. I'm not doing any bonds or anything like ETFs. It's just stocks. Not doing the OTC market, so the NASDAQ and NYC, stuff like that. Just the general stuff. And I'm also looking for the stock to kind of be like relatively slept on, per se, like almost asleep, no volume, to next day tons of volume, right? Like next day, or maybe we're talking relative volume like 10x or something like that. Okay. So I don't really run a back test on that first. I pull the data set, I take the data set into Excel, and then with that data set, I'm just gathering information as a whole. I'm doing analysis. My Excel will spit out tons of values for me when I filter it. So I'll start off, like I said, this is a data set. The first filter I do, I'll add in market cap. That'll be one filter. Then the next, and I'll look at that and see what that does to my, I guess my gap percent, my volatility throughout the day, or my average true range, or whatever people want to call it, right? Mm-hmm. And it'll give me the example from open to close. I can get a range from that if it's really positive, or if it's negative. And then I can get a general win rate from open to close if I'm trying to do like a open to close short or something like that. Mm-hmm. So that's kind of like my general approach. And then I'll add more filters in from there. Like I'll add float, I'll add relative volume on top of that for like relative volume throughout. That relative volume throughout the day is probably something I wouldn't add. Maybe it would be like the previous day or something like that. And then, from there, I'll start then back testing after I get some filters and I get some data. So I try to analyze the data set first. I have found success shorting, so that's not true. So I have found like profitable strategies, but I don't know how to model the slippage and locates and stuff like that, right? So it's been a little off. But just direct me as the coach. Just direct me on what I could do to improve. Okay, I'm just genuinely curious.
Yeah. So there's a couple things stuck out of me there. You said small caps. So, you would want to quantify that. What do you mean by that? So the way I would do it is trade almost everything, like include almost everything in that first collection of data, and include all the columns you can, all the data points that you possibly can in that first in that CSV file. Mm-hmm. And then what you can do is look at that data and figure out the exact points to use. So, you said small cap, but it might be something else, something similar to that is not exactly what you have in mind right now. And your tool, and this is exactly what MabeKit does for you. You'd be able to upload that spreadsheet, and it would go through all your columns, your entire column library, and tell you exactly the optimal rule to apply for your strategy.
Really?
So the big thing that most people don't know is, like, the traders I work with, we create large column libraries. Sometimes a couple of guys have over 400 columns in their back test.
That's about how much I have. Yeah.
So, and if you've got a good optimization tool like MabeKit, it'll tell you the exact rule, the optimal rules to use. And it'll give you like a menu of rules to choose from. And there's no other suggestion from that's possible. Like it's giving you the optimal ones. So when you're going through in Excel and like doing your auto filter and picking and choosing guessing and checking certain values to see how that affects profit.
Mm-hmm.
This is doing that across your entire set automatically and telling you the exact point across all the filters that's going to create a rule for you. So what it might tell you is, okay, market cap above this level is terrible. Market cap below this level is great. It'll tell the exact point. So
real quick, so is MabeKit is machine learning then, and it's like data science machine learning then pretty much.
Yeah.
And it just runs the optimizations for you because it's running the information in the background to spit out I guess filters or conditions that's going to give you maximum profit or something around there, or maximum robustness. What is it optimizing for exactly?
It's optimizing for profit of the trades. So you'll end up with something that has a lot more. I mean, you'll using this process, you'll end up with a much larger set and a more profitable set of trades.
And this is something that you have. This is like the cumulative knowledge of your journey wrapped up into this MabeKit. Then I'm assuming, right? And this is pretty much your process being automated through machine learning, AI, and just different tools that you have developed yourself.
Exactly.
Over time.
Yep.
Nice. That's very appealing.
Yeah,
that's very appealing.
It reduces the time of coming up with a strategy like dramatically. And like I said, that came directly from that huge drawdown I was in where I almost quit. I'm like, I got to change it. Like I got to come up with something better because this is, and this is what I came up with. Like, and it's just way faster. And it's
so.
Go ahead.
Okay, I was going to say, so with that, was this the tool that you were talking about? You was like, I don't really want to share this one with people.
Yes.
Is that
of course.
I understand why you didn't want to share it. That's a very powerful tool. Okay.
Yeah. Okay. It's, I mean, it's what I've used to create 30 strategies that I trade every day. And, it's what I've been using for 15 years now.
Okay, so then we have to talk about how can the people get their hands on this then?
Well, the easiest way. So I do have a free course on backtesting called betterbacktesting.com. If you go to that, you can sign up for it. That'd be the easiest way for people to learn more about it.
Okay. All right. Well. If you guys hear that and you're interested in the MabeKit, well, then go to betterbacktesting.com. All right, so let's keep going here. That's very interesting. I would definitely be checking that out. So we talked about I guess the proper start to a back test. Let's talk about like the general flow, like what type of data we should be using. How have you, in your process of looking, like what type of data are you using, where you getting it from? Can it just be any old data? Like, does it really matter? Like, how does that work for you?
The main tool I use for backtesting is Broker, and you can import data from Polygon, anywhere you can get your hands on it, but mostly Polygon or IQ Feed is where I tell people to import data from. I mean, the nice thing about trading is, if you think about other statistical endeavors, a lot of times you're working with just a sample of, basically a sample. And the nice thing about trading is you can literally download every bar that's ever occurred, and you're not using a sample. You're literally testing across the entire set. So that's a really powerful thing to be able to do. I suggest people use Broker, and use as much data as you possibly can. So I've got data going back to 2007 in my database that I backtest with. I don't every backtest I don't always go back that far, but I have that at my fingertips if I need to.
Okay. And then how do you, I guess, think about robustness when you're like evaluating your backtest or just a strategy in general?
You could kind of go in circles looking at different metrics. I keep it super simple. So I look at total profit, profit factor, win rate, and I just started using CalMAR, which is
I don't know that one.
Total profit divided by the biggest drawdown.
That's an interesting one.
So the higher the number, the better with the less drawdown. But the one thing I do look at, which you can't distill down to a specific number, is the equity curve. That equity curve is an awesome picture, which is telling you the pain points that you're going to have when you trade the strategy. So that's the most important quote unquote metric that you can look at is the equity curve for a backtest.
Okay. You said that was called CalMAR again? Was that?
It's called CalMAR. There's another name for it, I believe, but it's basically total profit of the entire backtest divided by the biggest drawdown. So, yeah, the bigger the number, the better.
Okay, and then what's a red flag that tells you a backtest is misleading?
Good question. So a lot of people get their hopes up when they're trading or they backtest a strategy with a really tight stop with using bars for
I've done this before.
So it looks great. Like it may have a small win rate, but the winners look fantastic because you're sizing based on this really tiny stops. You get these huge sizes. That's a big red flag just because there's going to be so much slippage there. You're not going to get those fills.
Yeah.
So one of the first things you can do to prevent that or to get out of that trap is to backtest without a stop at all. If your strategy doesn't have edge, that's not going to look good. So your strategy should work without a stop for the purposes of a backtest. I'm not saying trade without a stop, but backtest without a stop, you'll remove a lot of the precision issues like using a tight stop. You sort of doing that will uncover a lot of things, and you won't get into the some of the issues that you can get into with backtesting data.
Oh, okay. That's a very interesting approach, but that makes sense actually. Yeah. Next is there ever a point where backtesting is, I guess, counterproductive?
I would say mostly no, but I do see traders get stuck in what I call backtest world, where like you've put so much work into this to a strategy, you try to make it perfect. And really what they need to do is go live with it with small size, and and start learning at that point. You're going to learn a ton at that point. So, but I do see people like with perfectionist tendencies, like just get stuck in backtest world. So yeah, I think in that sense, you have to nudge yourself to trade it live, knowing that it's not perfect right now, but you'll notice some things by trading it live to be able to adjust.
Yeah. I've been there before. That's a lesson I'm actually learning relatively new this year.
Good.
Another trader I had talked about this a lot and how he got stuck in it. So Good to hear it reiterated here. Okay. I want to talk real quick. I want to hit on a couple of topics and we can talk about it soon. I don't think a lot of people really talk about this a lot. You're one of the only people I've seen talk about it. Is normalized metrics. Can you briefly explain why normalized metrics is, important? Like it's a very important metric.
Yeah. So you should think about, I have a column library. So I have a library of columns that get applied to every backtest I do. So as I add more columns to my library, they automatically get applied to my backtest. So, and that allows me to optimize using the Mabe kit to figure out how to, optimally improve your strategy. Well, you'll notice that the more normalized your columns are and your data points, the more likely your strategy is going to be successful. The more, the more trades you're going to be able to get into it and the more profitable they'll be. The way I think about it is if you're not using normalized columns, it's sort of like hitting foul balls in baseball. Like you're making contact. It feels like you're doing something, but you're not hitting, you're not hitting home runs. You're hitting foul balls. And using normalized columns is going to allow you to make better contact with the ball.
Understood. Yeah, that's a good way of putting it. I also think it adds a lot of robustness, and I feel like you can, expand the life of the strategy. This is something that me and my group have recently been talking about. Okay, the next question I have is slippage and real world friction. How does that affect, like I said, I had an issue with one of my short strategies because slippage and locates. How can I model that and how can I deal with that?
So the way I set up my back tests are I have commissions included because you can predict what the commissions are going to be.
Right.
But I don't try to model slippage in the back test. So the back test is like my pristine, my perfect thing that I'm trying to achieve. But in real life trading, you're not going to ever achieve that, in aggregate. But that's the goal. So I keep that as the reference. A lot of traders will try to model slippage, and I think it's a bit of a rabbit hole because you're never going to get it right. And I think it's just easier to, keep your back tests, quote unquote, pristine and use that as the reference and then measure your back test against your live trading and measure slippage and missed trades. Like I have automation that runs my back tests, compares to my live fills, gives me a report of slippage, like how much it was. And then I can go back and see, okay, I'm missing trades here. How can I modify the entry order so I can capture more of those without, giving up too much in slippage? So there's a lot of things you can do from a report like that will allow you to capture more profit from your strategy. But all that's happening, like you don't need to include that in the back test to be able to do that. I don't think that's the right place to do that analysis. Does that make sense?
Yeah, I mean that's I know most people try to aim for and they have like all these different methodologies and stuff, and I just haven't found like a methodology that makes sense to me. It's just I think it's just unknown number.
Yeah,
it's just kind of hard to hit.
Just know that there's always going to be a shortfall. So just know that when you're back testing, it's going to be some shortfall, and you're never going to achieve the back test exactly, but like figure out what the shortfall would have to be to make the strategy unprofitable. Like that's a good thing.
I was just about to say that my group, we recently just started doing stress level testing for slippage. So we'll take slippage of a certain percent of the profit to see where it breaks. So we know, hey, if it's going to be 5% of the profit, this is the margin where it's going to break. We cannot push past that. So if you see it in real time, your strategy is not going to work if that's a consistent thing.
Oh yeah.
Okay. So the next thing I want to talk about is automation. Obviously you develop a lot of tools. I mean, you've been talking about it the whole time, right? When should a trader start automating?
Immediately.
Oh, wow.
Like that, you should be looking at your workflow, even if you're not, trading a system that can be automated. Like look at your workflow, and there's no doubt some parts of it that can be automated.
For sure. Yeah.
And you should be looking at, like, I love it what you were saying earlier about you're streaming your screen and displaying your trades. That's a great way to do it because you can go back sort of as a neutral observer and look at your workflow and say, okay, well, I missed this trade because this was going on my screen. Like I can set up my screen in a different way. Like there's some steps that you're doing that you probably could completely get rid of. There's some that you could automate. But yeah, you should be automating as much as you can. And there's a whole range of, it doesn't mean like you're all, overnight you're giving complete control to a robot software to make trades for you. But there's a whole range of stuff you could do to automate certain aspects of what you're doing.
Yeah. Now that was going to be my next question. Is like, what type of steps would you advise someone who wants to start automating to get automated? Obviously, some people fear automation. They're like, oh, I want to be the trader. I got to be the person behind pushing the buttons. How do you, as the coach, walk them to that journey of becoming like as automated as they possibly want to be?
So the way I've done it with, so a lot of traders I work with, they already have a strategy that is working well, and they're trying to get better.
Yeah.
So create new ones. And part of that is like a big part of that is automating what they're doing, like creating a strategy that's from the ground up automated. So what I don't like doing though is like ripping out something that is already working for them. So what we'll do is like create a new strategy that's alongside what they're already doing, what they're already comfortable with, what they're already making money from. But the other strategy is, completely automated in a way that makes sense to them. And we start it with small size, trade it alongside what they're already doing. Then you could sort of ease into the automation. And so, you'll pretty quickly see that, okay, in my manual trading, I didn't get, here's the fill I got, but man, the robot got this fill. It's like, it's going to be pretty clear at some point that
the robot's better.
The robot's better. And, it's kind of a humbling experience because, I went through the same thing when I first started backtesting. I thought I was trading that system and I had some discretion in there. And the very first backtest was better than my manual trading. And I'm like, man, what in the world? Like it's humbling because you're like, man, like, what am I even doing here? Why is my discretion in this at all? I thought it was great, but like one backtest is better than that. It was quite a humbling thing to think about.
I think we're all going literally through that. You might have went through it earlier. I think we're all going through that just in life in general with the new AI and technology. We're figuring out that it's going to be better than us, right? I think we're all going through that. So next question I have here, and we're going to wrap up here soon, is
okay.
What is it like? Who you talked about like the snake oils, right? Who should be qualified to coach someone? Like, who should we be listening to? Like, what qualifies someone to, I guess, give trader advice?
Yeah, I think anybody can be a good coach, but you have to be able to build trust. You have to have empathy with the person. You have to really understand what they're going through. You have to understand their background and how they, how their trading got to where it is now. I think I would say kind of a subset of coaching is, I think, collaborating with other traders, like the group you're describing. People are way too secretive. Traders are way too secretive about what they're doing. They would benefit way more from sharing what they're doing with other trusted traders. That's a big part of what I teach people is like having a system for networking with other traders and creating collaborations with other traders. That's really where some magic happens. I've had several collaborations over the years, and they've all been that's where you make strides forward with the right kind of collaboration. And, traders, frankly, most traders are takers when they should be givers. So they should be more willing to share. Some of the best traders that I work with, some of the best in the world, frankly, they've been doing it for a long time. They say that they wish they would have shared more with other traders for their trading career. They know they'd be in a better place now if they'd have done that. So it's a phase you go through as a trader where you think, man, okay, I'm not telling anybody this, but really you get way more back the more you give.
Yeah, I've heard that from multiple traders. Okay. All right. So to wrap this up, I would like to get some of your personal reflections on your journey. The first one is, I know for a fact you love traders who are serious, and it's a need for them to trade. They're not trading, for a hobby. They're doing it for a lifestyle. This is what they want to do. And it's like indebted in them at this point, right? So my question is, for the people who are like that, what is the most valuable resource do you think for them?
Yeah, I think just having a process for coming up with new trading ideas and putting yourself in a position day in and day out where you're noticing the unusual stuff, and keeping good track of your ideas, and prioritizing them in such a way and backtesting them and getting better and better at that, quicker and quicker at that. That's where that's how you're going to move the needle forward.
Okay. And then what do you think held you back the most in your career so far?
That's a great question. I think I probably was a little too risk averse over the years. Probably should have left Trade Ideas a little bit sooner. Probably should have scaled up some of my strategies a little bit sooner. I was probably too conservative there in some cases. So yeah, I think probably a little too safe.
Okay. Makes sense. Okay. Well, unless you got anything else you want to say to the people, Dave, can you just let them know where they can find you?
Yeah, the easiest way is davemabe.com. I've got a free email course called Better Backtesting that you can take. So if you go to betterbacktesting.com, you can sign up for that. We'll get a lot of good feedback from traders there. But yeah, feel free to reach out anytime. And yeah, appreciate you having me on the show.
Yeah, no problem. And for you guys that's interested, I'll have Dave's social medias and stuff like that inside the description of this episode. And with that being said, we're going to get out of here. This is episode 5 of the Quant Room. I hope you guys enjoyed. Always, like I said, the show must go on. Leave some comments on who you guys think we should be interviewing next, having on the show, talking to, who can provide us some good systematic information that we all can learn from. Peace.
Thank you.